What is good, everyone, and welcome to my video. Today I will be running you through the best draws on liquidity we have in the market if you're trading ICT like me. These are the best draws on liquidity, and let me just get right into it. I will do a list, the best DOLs. DOLs, my bad. Okay, so let's get into it. The best draw on liquidity overall, in my opinion, is the highs slash lows. Okay, so the best draw on liquidity is data highs and lows. For example, just to show you really quick. So we have some type of news, let's say CPI, we have NFP, um, Trump tweet, anything like that. We have this candle on the 1 minute, and it has this huge wick, abnormal wick into one side. So this is like the best drawn liquidity in the market. The best drawn liquidity in the market because a lot of orders are up here that need to get filled. So what will market do? Let's say we trade away from it, and you get this. For example, in this case scenario, you get this long setup up to it. 1 second. Oh my god. You get this long setup into it. So this is your stop loss, this is your take profit. Right here you have IFVG. This is my confirmation. So in my case scenario, that would be the case. You have some type of liquidity sweep. So let's say right here you sweep this low. That is like Asia, London, whatever, doesn't matter. Right here you are in a higher time frame PD array, fair value gap, order block, breaker block, anything like that. BAM, IFVG confirmation, you enter target data highs. Or for the other example, you have data low like this. And this is also like the same case scenario. We trade higher and bam, and you trade into this. This is your take profit. Really good draw. I already told you why. Or we can also have on both sides, like wicking both sides. Also works the same as well. So data highs, data lows. After that, equal highs slash equal lows. Basically, it's the name tells you everything. Let's say market is just doing nothing. Bound, we create equal highs, we trade away from them, and right here you have this equal highs. We perfectly tap the same point twice, so people will be thinking, yes, really good resistance. We will hold this. A lot of stop losses from retail get put up right here, thinking this short will play out. What will market do? Let's say, for example, my model, liquidity sweep, PD array, delivery, we get inversion right here. You long, and you are longing into this equal highs, and market will hunt these retail traders and they will get stopped out. So after equal highs and equal lows, I would go for relative equal highs slash relative equal lows. Again, the name says it, so we are having this range, we create this highs, bam, 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 we trade away. Okay, so you have this relative equal highs. They are not actually equal, but they are similarly, they're still relatively the same. Okay, let me just kind of figure this because it's not the best example. Let me just say like this. Okay, yeah, this is better now. So we leave these three relative equal highs above. We are trading away. Let's say right here, you got the liquidity sweep and you can trade into them. Again, people will place their stop losses thinking it's a good resistance for us to go lower, and market will hunt them. For next example will be low resistance liquidity. So low resistance liquidity is basically, let's just say for example, we are putting in these lows, market is just trending higher, it's putting in a bunch of lows right here, and they are basically creating this trend line, and you can see how well we are respecting the trend line. let's say then we trade away, we trade into some sort of PD array again, bomb, inversion, bomb, and you target all of the low resistance we have just created from this move up. Just seeing this algorithmic lows, bomb, you want to target them because again, a lot of stop losses are down here, market will hunt that, and it's a really good draw on liquidity. For next, I would go with session highs slash lows. Those are basically just Asia highs, Asia lows, whatever. Let's say this is Asia low, this is London low, and these two are also, if you remember from last example, or this relative equal lows. So, and paired with session high slash lows. So for this example, lows, they are really good draw on liquidity, and you want to trade into them. You don't need confirmation though, so always look for context when using this, of course. So yeah, session high slash lows, it's basically just ICT kill zone zones, highs and lows, and those are the best draws on liquidity. Now, one thing I would like to just add overall, so what you should do is target these draws. So what you should be doing is targeting these draws on liquidity, but you shouldn't be doing so. You shouldn't be targeting protected highs slash lows. So what is an example of protected highs and lows? It's basically just let's say you have this AMD model right here. Market is accumulating. We are getting this manipulation lower, and we are going back here, and now we are ranging in here. So what you shouldn't be doing, let's say you got this liquidity sweep up here, we don't sweep this out, and you want to short into this low. And for this example, this low just swapped out some sort of liquidity. Let's say this low swapped out, I don't know, low resistance liquidity and tapped into a PD array. You shouldn't be shorting into it because it is protected. It is high resistance liquidity, not low resistance. Up here, we are leaving the low resistance. This is high resistance, and we won't trade into it. You want to be longing into this, not shorting into this. And for the other example, you're getting this accumulation again, manipulation higher, and then we just start dropping here, and you do not want to long into this high because now the same, oh my bad, let me just remove this because it's getting messy like this. You don't want to long into this. Why? For example, again, this swapped out liquidity, my bad. This swapped out liquidity, it tapped into a PD array, so it becomes high resistant, and you shouldn't be targeting this. This is low resistance, so target those. Always focus your, I'm gonna just write this down because it's important. Stop loss. So stop loss needs to be high resistant. It needs to be highly resistant, and take profit low resistant. Yeah, so this is how you should trade. Your stop loss needs to be high resistance, so whether we sweep out liquidity, we tap into a PD array, and the high or low becomes protected, it becomes highly resistant, and your take profit should always be one of these. This is your take profit. All of this draws on liquidity I just went over. And just let me write this down. Thank you guys. Thank you guys for watching. I hoped you learned something with me going over these examples. I also showed you a little bit of my model, a little bit of examples. If you have any questions, just let me know down below. I will make sure to respond to every single question. This is the only video about the best draws on liquidity you will ever need. I can make another video going over examples if you want, but overall this is what you should be doing with your trades when it comes to draws on liquidity. So yeah, thank you guys for watching and peace out.